Good morning. I hope you're doing well, and welcome to today's edition of 600 Seconds of Trading. This is our morning market update at 9 a.m. London time, where we take a look at the markets and provide you guys a general overview of what's happening. Before we start though, I need to stress that trading financial markets unfortunately is high risk, and about 80% of the people that trade Forex and CFDs tend to lose. So please bear that in mind, and please note that we're doing this with an educational purpose to support you in your trading. And if you don't know who I am, well, my name is Alejandro Zambrano, and I am the Chief Market Analyst here at TradeCaptain.com. This is me, and I've been working in the industry for a few years, 2005 actually, so it's quite a long time. And I used to be the Chief Market Analyst, or the Head Analyst of the FXCM London office. But pretty much since last year, I'm with Amana Capital, and I've been doing webinars like these ones, providing educational news, but also presentations like this one, which I did in China last year. Okay, let's begin, and let's talk markets. It's something interesting happening across the world right now, and we're starting to push towards a softer dollar, despite US 10-year yield increasing. So this is the US 10-year yield. This is the bond yield that people need to pay, or that the government pays and you receive. So if you go out on the market right now and you want to put your money into something like government bond yields and then the US one, and you say, okay, I'm going to lend you money for 10 years. Then they're going to pay you 3.305% per year over the next 10 years. And then by the end of the period, as long as the US government has not defaulted, you get your money back. Now, what's interesting here is that this is on the rise and started to rise here already on September 7th. That happened on the back of the non-farm payrolls numbers. You might remember they were very good. Wage growth increased to 2.9% year on year. So the market is heading to the upside. The people are very enthusiastic about U.S. economy, which is supposedly to be growing around 4% annualized in the third quarter, which is a similar reading to what we had in the second quarter. And 4% annualized growth, that's really, really strong. It's almost unheard of over the last few years. It's definitely unheard of actually over the last few years. Obviously before the crisis, quite sure we had 4% growth, but we don't really have that too often anymore. And that's because of all these big tax breaks for big corporations in the US, and light land regulation and things like that. So everybody's a bit of a happy mood. And then at the same time, you have seen tariffs introduced by the Americans on China. Now, these tariffs are 10%. It will kick in next week, and it's 10%, which is lower than the 25% which the market was projecting. Those 25% can kick in by next year if there's no deal with China. So things could go nasty, but right now people are saying we have high growth, and we see the confidence in the bond market, and we have less tariffs than projected. So you have like the Aussie dollar here trading above the September 13th high and completed a head and shoulders. This is the head, left, right shoulder, and the target of this market is at 73.30. So this market is heading higher, and at least in the short term, I think it could continue to gain as long as it's above 71.40. And then we'll see what happens when we move up here. If we move all the way up here and many other markets, we could potentially have a breakout. Now, I'm not trading this because this is a corrective move against the big picture. If you look at the big picture, it's clearly bearish, so I don't think it makes too much sense. But you have other pairs like we discussed here before, which is the dollar yen. My idea with the dollar yen over the last few weeks has been to do nothing until we take out this high here. And then the market did indeed push higher. And I think we can continue to gain, especially if US interest rates continue to gain. If you look at it from a very, very big picture perspective, this is short-term head and shoulders we're working with here. But if you look at this, this is the daily chart, and this is the 2018 low, and this is 17, sorry. So you can see this is a big head, big left shoulder, big right shoulder, and the actual trend line here actually kicks in here, then that neckline. And if that actually is a head and shoulders, then it projects a target of pretty much 122. There's a 900 pip move potentially if we take out this trend line, but I'm not buying this directly. I'm trading another dollar, another yen pair. I don't really think this is going to happen right now anyway, but if we take out the July high, then most likely we'll see even higher stock markets, even higher dollar yen, and this is probably going to be underpinned by the Japanese yen, by US interest rates, and then you have as well the Japanese stock market. So that's sort of what's sort of happening, a bit of a shift in the attitude. It's not so much, it's definitely about the dollar, but it's more about risk on, risk off, higher interest rates. That's sort of where the market is focusing now, and in essence looking for correlations. In essence looking and saying, okay, the US 10-year yield has increased and probably continue to increase. What's going to happen with all the yen pairs, so on and so on. Now, in the case of the euro is actually looking really interesting today. It's interesting because it's starting to trade very close to 1752, which is this level up here. And as you know, we've been trading sideways for quite some time, so if we take this out, it could be the beginning of a push to the upside. What you want to do at that time as well, you do want to take a look at the tools sentiment. You can check out to see how traders are positioned. So right now, 60% of traders are long and 40% of traders are short. If this starts to go 50-50 and with more sellers than buyers on the break here, then that could be an indication that we're probably going to see push to the upside. Now, we're not that far away from that level. We might actually close above this level today, which would force us to put a stop loss of about 100 pip below today's low. And if we go to the upside, you can potentially make maybe 238 pip, maybe 400 at the most. So it could potentially develop into something very good, but I'm not really that confident that we're going to go all the way up here. I think we could probably go up to 120 and then we'll see. So it's not an amazing risk-reward ratio. Ideally, the market closes today here, and then tomorrow it breaks. So then the stop loss just goes below tomorrow's low. So if it closes here and the low happens to be the same, then we'll risk 60 pip, risk about 60 pip, and then potentially make 236. So 236 over 60, that's almost 4 times your risk. That's a good trade. So ideally just closes here, and then tomorrow we have the breakout. Keep a close eye on it. Obviously, as always, let's not get too ahead of ourselves. We need to take out 1752 and need to have a close here above it for this to qualify being a breakout. Now, people always say, when do you buy then? Well, there's no right or wrong. Like, it's always a bit of a gamble. So sometimes, or most of the time, what I do is I buy on the breakout, and then I just see where it ends the day. So if it ends the day completing the breakout, then I'll keep it. And if it doesn't end the day completing the breakout, I will usually reduce the position a bit, and sometimes I will just close it out. Now, this is the pound. Pound is also doing good. I mean, the dollar in general is not doing too good today. The dollar is weakening against the Aussie dollar, New Zealand dollar, and the pound, the euro. It's unchanged against the dollar yen. Now, what you can see here is that this market is overbought, unfortunately. I was perfectly fine buying down here for the market to rally higher and book profits here. But right now, buying up here, fortunately, stop loss, we probably need to go at least down here. So you're talking about a 200 pip risk. And there's so many highs here, so maybe the best of worlds, you get 100. So I will be very, very careful here. I think if one wants to buy it or trade with this trend, it's probably better off somewhere here in the middle. And I'm not sure exactly what's going to happen, but there's always something, some Trump tweet or some other news that changes in the market, shifts dramatically. Again, we talked about the dollar yen already, so it's moving to the upside, and I'm quite certain we said about buying here on this move. And I think if it would move back down to maybe 112.07 or maybe 111.91, I think traders will try to buy. Here is the price of gold, and gold is just trading sideways between the September 11 low and the August 28 high. I'm treating this as a rectangle. It could also be treated like some sort of a triangle, I guess, or some sort of a wedge. The objectives are very similar, and most people that trade wedges anyway, they don't actually trade on the break of the wedge, trade on the break, they don't trade on the break of the trend line, they trade on the break of a horizontal support and resistance. So here, I don't actually have a very strong, I have no view right now. We just need to wait for that bullish break or that bearish move. Now here, looking at the Aussie dollar, it sort of hints that maybe we're gonna head a little bit higher here. And obviously if the euro starts to move higher and the whole dollar just starts to weakening, then you're probably gonna see push higher here. Crude oil, not much happening here. As I said in the past, trading within this big wedge or triangle. Then you have a head and shoulders, left head, right shoulder, and the neckline goes up here. So if we take out this level, you'll trigger these two patterns in one go. And here are the different patterns. Here's the target of the head and shoulders. Here's the target of the triangle. So I think if we would rally up to the 2018 high, that would not surprise me. In fact, I think we can go even higher. S&P, we talked about the S&P. Unfortunately, we did not really move down to the buy zone. We did spike lower, but I'm not sure if you were able to catch that. The S&P in general, I think, is going to continue to gain. And now we're working with a smaller pattern. It's an ascending triangle. I would argue maybe that these 2-3 levels make up the ascending pattern, but it's better to focus on the break of the 2018 high. Yes, that 2018 high. Remember, there's so many people that are constantly bearish, but we're still up here. What can I say? Take out the high, probably rally a little bit higher, then probably a little bit lower, and then probably upwards again. This is a target derived from this pattern. So if we take the whole base, we get this 1.81% push. If we don't want to be sort of that, if we don't want to be like that aggressive, we have another target here, which is based on this little section here. So this is looking really interesting. I think we can definitely gain. From a big picture perspective, you have failed head and shoulders, an inverse head and shoulders, head, left shoulder, some sort of right shoulder push to the upside. If it's not that, it's some sort of a triangle. And if it is a triangle, the pattern is pretty much the same. You see 8.82% move. So even if we treat it as a triangle, it's like that. And this is something we triggered here, which I actually already reported on this pattern in July. And so far it's going with the flow. German DAX, what's going on here? Trading to the upside, as we talked about. As you know, we had this descending pattern I wanted to sell. I sold the Spanish stock market, got stopped out of break even. Here as well, the market moved up. So if you would have sold on the back of this, you've been stopped out of break even. The market is not heading into the pattern, but it really struggles because we're dealing with a downtrend here. There's a lot of like people talk about these great stories, and this company was down and I bought it and made a lot of money. It's possible to do so. but the problem is that most of the time you won't make any money. For example, there's the stock H&M, which you know about. Well, I assume you know about H&M, right? That's a favorite, not favorite, but it used to be the darling stock of the Swedish stock market. This stock used to gain with about 30% per year since I think over the last 20 years or more. But you can see here how this, and this is a log chart, so let's remove the log. Okay, so you can see how that share price gained with 400% up until March 2015, and now it's been declining. And I have some friends of mine that are not into shares too much, but they buy some, and they started to buy here at 200, and they were just buying because it was cheap, and that's not a good strategy. You always need to wait for the trend reversal to confirm, and that's why the DAX, I don't really want to buy it overall. I'm bullish on stock markets. And here as well, you know, buying at 200, now it's 142, so it's not really was not a good deal. Might bounce back, but there's new companies that do what H&M used to do many years ago, and they do it better. They have cooler clothes, cheaper clothes, and they don't have all these big stores. They just do everything online. So, and they make millions of money. So what used to be very good doesn't always have to be good in the future. In fact, a lot of companies come and go. So you might look at the German DAX and say, well, it's cheap. It's cheap compared with US stock markets. The PE is better. Yeah, it's fine. But most people that trade on the back of PEs and things like that, they're very long-term investors. They're gonna keep the shares for a year or two, and if it doesn't work out, they'll still keep it. So here, I don't buy into that. The German DAX needs to take out this high, which is 12,601. Alternatively, it's going up now, and then what happens is that we let it go up, and then it creates a new high. So it creates a new high like this one, and then when it goes up and take out that high, then that's fine. Right now the market is guided by these lows, and I think it's fair to assume that a new low will be created here somewhere. Sometimes it just goes straight up, but if this is going to go straight up, well, what's going to happen with the S&P? Probably even better than the projection I shared with you. Okay, this is the dollar index. I don't show you this too often. Again, we're sort of seeing a breakdown in this market. The dollar index, or the dollar, is pushing a little bit lower, and if this indeed is a major high, I mean, well, one could even call this a head and shoulders, left head, right shoulder, which would in that case project a decline like this. I think if we have a corrective move, then that would not be so surprising anyway. I mean, what's going to be interesting is in the future, you can see this could be a head, this could be a left, and then maybe we just need to create that right shoulder, and then we'll just rally. At least from a macro fundamental perspective, that makes sense. Now these are just fibs from this low to this high, so these are the different levels. So giving the price action here the way this looks like, I think if we go down to 93.20, which is a 50% correction, that would not surprise me. But then we'll see how much further this would like to trade. And finally, let's take a look at Bitcoin. Not too much happening here. Market is in the short term trading sideways between the low here, September low, and then you have September 14th high. A break to the downside can take you a little bit lower, but then there's this big support level. a break to the upside to take you up to maybe 69.50, and then there's this big high here. So I think this is probably going to converge a bit more, so continue to be a bit more boring, and then we'll see what happens. Take out the low. I think it's time to turn bearish. Take out this September high, and I think it's time to prepare ourselves for a bigger correction, maybe up to about $10,000 per coin again. Okay, good morning to you guys as well. So we have DD here. We got Oman Adil. Thank you so much for joining us. I think it's the first time I see you in the chat. Oman, thank you so much for joining us this morning. We got Maurizio and we have Antonio as well. Good morning, gents. I hope you're doing well. Unless you guys have any questions, I think we're gonna wrap things up. For anybody here that is new as well, I put 2 Twitter handles. The first one is mine, the second one is for Trade Captain. The Trade Captain is good, provides you with all the analysis from my colleagues here at tradecaptain.com, and also includes my own setups and my own ideas. And then you have my own Twitter at AlexFX00, which gives insights, or I share my ideas here and some of the comments and things that I think are interesting if you're trading. Okay, so EU prospects. Okay, let's check that out. Let's check out the Euro Yen. Okay, so this is the Euro Yen, and the Euro Yen is, I think, the way this is looking and the way the US 10-year sales are looking, I think we're probably going to take out 132.03. Now, it's a little bit tricky because you have another high here to your left, but it's always like that. It's never perfect. So I think one way of looking at it is, again, can I get a good entry, and can I, after a few days or so, reduce my stop loss to almost break even? I think this could be one of those occasions, because I can think we can deal with this like some sort of a rectangle. And from a rectangle perspective, if we take out the high here, it suggests a really bullish move higher, maybe to 139.53. So I think this is interesting. I think maybe the best thing to deal if I would like to trade this is to let it close on the other side, and then from there take it from there. Like if you look at it from a 1 hour perspective, I mean, most likely let it close, and then maybe work out a stop below the low of the day, or if it breaks tomorrow, the low from tomorrow. And then you look at maybe the 1 hour and try to see if it makes sense to find a decent low. For example, like right now on the 1 hour, the short-term trend is bullish about 130.67. And this market will try to take out the high as long as it's below this level. Okay. Got a question. Is there a head and shoulder in the Euro Yen pair on the daily? I know what you mean. I think we had initially, I'm not sure, to be honest. At least here, I don't actually know. No, I think we should just treat this as a rectangle. That's what I would treat this. In the big picture, if you look at it from a really, really big picture, then yes, you have something similar to some extent. It's not like clear because this shoulder here is much higher than this one here. Ideally, it's a bit more symmetric. So I wouldn't really be able to tell you, but definitely a rectangle at least here. Okay. Guys, we're gonna wrap things up. Guys, don't forget to follow, and don't forget as well to like the video here. It's really important that you click on the like button, and as well, very important, if you could follow us on Trade Captain, retweet our articles. If you are on forums or you have friends, share this with friends as well. Why? Well, because the website, it might look very professional and nice, and we are professional, but the website itself has just been around for 1 year, and it's still a little baby that we need to grow, and that's really, really important. So if you like the content, please share it. Have a good day, guys, and I'll see you guys tomorrow about the same time, so around 9 o'clock London time. Thank you.